Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down both from an order flow and technical perspective. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move. And in doing this analysis, I will provide as much free education as possible. So I really suggest that you stick to the video to the end. So without further ado, let's go straight to the charts. In today's video, I want to speak about USDJPY. Because at the moment we have quite interesting price action and structure. Starting here on the monthly, in fact, what we can notice is that we have a market which has just created a very strong impulse to the upside, followed by the start of this correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can notice how the market hasn't retraced to the 0.32 yet. But 0.32 is the first Fibonacci level to which you expect the market to provide a correction to in order to not be overextended to the upside anymore. So what we could expect here is some short-term bearish price action to develop before then having more long-term bullish price action. That is at least what we could expect by looking just at the monthly time frame. Dropping down on the weekly, however, what we can see is that the market at the moment seems definitely overextended to the upside. In fact, if we look closely, we can see a massive impulse to the upside with no signs of a correction. We just had these two red candles, and at the moment the market is already trying to continue higher. Also here, if we take the new Fibonacci here on the weekly impulse, we can notice how the 0.32 was not achieved, meaning that we could expect a potential double top to be created at this area and the market to actually start a correction from this zone. We can also notice how in creating this move to the upside, the market has created this overextended W formation. And in general, after the creation of an overextended W, you would expect the market to provide a correction at least to the 0.32 of the Fibonacci taken on the impulse leg. So also here on the weekly, we could expect some short-term bearish price action before then more longer-term bullish continuation. Going down on the daily time frame, what do we see? Now, from a daily perspective, first of all, I did speak about USDJPY when the market was around this area. I explained all the reasons for which we could expect this rejection lower. The market has now created that move. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. However, now that the market has created a move to the downside, we can notice how a new pattern has started to get created. In fact, we can notice how the market is currently trying to create this inverted head and shoulders with the left shoulder here, the head here, and the right shoulder here. As the market is creating this inverted head and shoulders, we could expect the market to create more bullish continuation, at least in the short term, in order to then print a potential double top around this area. That would be even more interesting because if from here the market just goes straight up, at that point what we would have is the creation of this W formation here. And as I said before, after the creation of a W, you would expect at least a move to the downside for the completion at the neckline. So in this case, if we do get this move to the upside, we could at that point expect a correction back down to the neckline. And if the neckline gets broken, we could expect even a drop lower. So here on the daily time frame, if the market will actually go and create this move to the upside, trying to complete this inverted head and shoulders, at that point there would be definitely the possibility of looking for a potential short-term shorting opportunity back down at least to the neckline of the W formation. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the JPY, we can see how with the last reports, net positions have been decreasing. We went from minus 25k to now minus 102k net positions with 15.2k shorts added with the last report, which makes the JPY weaker. And a weak JPY is exactly what we need for this move to the upside. However, we can see how we are already starting to see longs added with the last four reports. Specifically, we can see how with the last report we had 6.9k longs added, meaning that we are already starting to see accumulation of longs on the JPY from an institutional perspective. So This aligns perfectly with what we have already seen here on the technical side. We could expect a move to the upside in the short term, fueled by the weakness of the JPY given by institutions adding these shorts. However, here there would be even a nicer area because it's higher to continue the accumulation of longs in an even more aggressive way. And at that point, there is definitely the possibility for a rejection lower, fueled by the strength of the JPY coming from the longs that are already getting added. So if we do get this move to the upside from here, there is definitely a possibility for a potential rejection lower. Now, how we could be approaching that move? As usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the downside for the market to complete the pattern at least at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower, you will see that at the moment I'm running a special promotion in which you have the possibility to join with a massive discount. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the timer goes to 0 and the offer ends. However, spots are limited, so if they finish before the timer goes to 0, the offer will end anyway and the price will go back to the original one. So I really suggest that you take advantage and join directly from here and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I will see you in my next video.